Well, thank you, Julie. And good morning to everyone on the call. And thank you again for joining us for the next 60 minutes. As Julie stated, my name is Jared Kramer, and I'm an account executive at Logan Consulting, and also one of the senior team members of the Microsoft Dynamics AX and 365 for Operations Consulting Group. Logan is a gold certified ERP implementation partner with Microsoft. And we are very excited today to be here with D365UG and AXUG presenting on a webinar on understanding the inventory value report in AX 2012. So let's look at today's agenda. So first of all, we're just going to have a quick 30-second Logan Consulting overview, and then we're going to dive into it and explain what is the inventory value report in Dynamics AX and learn what the inventory value report can be useful for. And then Rosie will open up the a demo environment and actually configure an inventory value report and then run and interpret the data. And then we'll open it up for some questions at the end. But first, let's talk about Logan Consulting very quickly. For those of you on the phone that haven't heard of Logan before, I wanted just to give you a quick intro. So we've been around since '92. We've been implementing and supporting ERP customers for close to 25 years. We're headquartered in Chicago and have deployed over 80 consultants a year worldwide on our ERP-related projects. And then although our experience spans over many industries, we typically specialize in manufacturing, distribution, and professional service organizations. We support our Dynamics AX and 365 customers with assessments, implementations, and optimizations of their systems, harnessing a business process-focused methodology. And as stated before, we are an ERP Gold partner since 2003 and a very active AXUG member and contributor since 2014. So as Julie mentioned, Logan is also represented today by Rosie McAdams, and she is one of our senior AX and 365 for Operations consultants. And Rosie will be conducting the rest of today's presentation and demo. As previously mentioned, please use the chat feature and ask questions during the webinar, and we will answer them at the end. With that, I will turn it over to Rosie. Rosie, please.
Okay. Hi, everyone. Like Jared said, my name is Rosie McAdams. I also, as he said, I'm a senior consultant and project manager for Dynamics AX and 365. My focus is on the supply chain area of things, but kind of being an AX for a while, have also gotten involved with a lot of accounting projects as well, and I think that the inventory value reporting, inventory costing, etc., brings the two topics together quite nicely, and I think that the inventory value report is kind of a bridge to the gap between both the supply chain side of things, the actual physical on-hand inventory, and the costing and kind of accounting side of things. So we're going to kick this off just before we dive into actual demos with just a little bit of background on the inventory value report and kind of some useful information. So first thing, what is the inventory value report in Dynamics AX? So not to state the obvious, but the inventory value report tells us the value of our inventory at a given period, a given time period. But what does that really mean? The value of your inventory is how much the quantity of the inventory that you have on hand in your warehouses costs you to procure. Now this may sound simple, but inventory costing in AX takes a few things into consideration. That being both costing methodology and physical versus financial inventory, as well as a few other things, but we're not going to dive too much into that. Just want to give kind of some basic background. So let's start with an example. Today you buy one piece of inventory at $10. what is the cost of that inventory? $10. You have one piece of inventory for $10 in your warehouse. Overhead costs, et cetera, could affect this, and also if you use standard cost methodology, this could also affect it. But for a simple scenario, let's just say we're using average cost, I guess, for now. So tomorrow you buy a second piece of inventory of that same part for $20. Now, what is the value of the two pieces of inventory you have on hand? $30 is what we would all assume, one piece at 10 and one piece at 20. Okay, so now let's say you sell one of those pieces of inventory. What is your cost? This is where things, this is where your costing methodology really will affect what the cost of your inventory on hand is. So it could be 15 if you use average, with your average cost, you have two pieces at 15 each. Could be 20 if you're using FIFO, first in, first out. Or could be 10 if you're using LIFO. So this isn't really the point of the webinar to go through different costing methods, but before you can understand why the value of your inventory is stating what it is, why the inventory value report is giving you certain information, you really must understand your costing methodology. So definitely, if you guys ever need any help understanding costing methodology in AX any further, definitely feel free to reach out to us. But definitely that is the building blocks before you can understand interpreting your inventory value report or the cost of your inventory. Another important concept in AX that you have to understand before you can properly interpret your data in the AX inventory value report is physical versus financial inventory. So physical inventory. This is inventory that is physically in your warehouse. So on the inbound, it's from a receipt, and on the outbound, it was from what you shipped. So packing stuff updated. Financial inventory. That's inventory that has been vouchered or some people say invoiced. So invoiced or vouchered in AX terminology is invoiced. So basically anything that you've received an invoice from the vendor and entered in and posted in an AX for, or once you issue an invoice out to a customer and post it in an AX. So that's financial, invoice updated. Physical is something that's just been received at your dock or shipped out. So it's really important to understand those two concepts, especially when working with inventory value report. And there's some really important setups to consider with physical and financial inventory in the item group setup. So let me really quick navigate over to AX. So really, I'm just going to open up my item model groups. Sorry, I think I said item groups, but I meant item model groups. And I'm just going to show you a couple of the two parameters that are important when dealing with physical and financial inventory. So this first two boxes up here, physical negative inventory and financial negative inventory. So physical negative inventory, people don't usually check that. I mean, it really depends on your scenario, but the financial negative inventory is really what I want to focus on. So financial negative inventory, this means that it's a really, especially with the inventory value report, it's a really important concept to understand. So basically what it means is if you allow physical negative inventory, or sorry, financial negative inventory, it means that if I receive 10 pieces at $10 into my warehouse, that's at $100, my physical value would be $100, but I have not yet invoiced it yet. So my financial value is still $0. Then, let's say before I receive an invoice from the vendor, I sell and invoice 5 pieces also at $10, at the cost of $10. So now this is just a very simplistic scenario. My physical would be 100 minus 50, $50. However, my financial would be would be 0 minus 50, which would be negative 50. So this is where if you allow financial negative, this is where you would get a scenario where you would have a negative financial value. Once you invoice that quantity that you received, that will now not be, it'll go back to $50. It'll come up by that 100 that you received in an app. So that's a really important concept to understand. Again, sorry, I'm just kind of rushing through it, but if you guys have any more questions on that, we can certainly have follow-up conversations on that as well. So that's one piece that's very important to understand. If you do not pick financial negative inventory, basically it won't let you sell something that you've not invoiced yet. So that's how you can avoid any financial negatives if that is confusing to you at all. Finally, the next important physical versus financial tick boxes on an item model group are these ledger integration post-physical inventory and post-financial inventory. So obviously this is an expense product that we're looking at here, so there's one that has post-physical and post-financial. So posting physical and posting financial. Having these two check boxes are very important, and knowing how you have them configured is very important for when you go to reconcile your GL balances with your inventory value report. So post-physical inventory in the GL, what does this mean? When you receive something at your dock, it is going to hit a GL account. If you do not have this posted, when you receive something at your dock and you do not have this checkbox ticked, it will not hit a GL account. So therefore, you receive something in your subledger, in your inventory subledger, it'll say, I have it, it's here. In your inventory value report, it'll say, I have it. But in your GL, it has not been posted to any GL account, so it will not show in any GL accounts that you may be reconciling with. So this is something to check if you're having issues reconciling, if you're actually posting physical inventory. Second thing is post-financial inventory. I think that most people would post their financial inventory, so this is if you receive an invoice for something that posts to the GL. So these are two important check boxes. I think the physical one is a little bit more important to understand because for physical inventory, we normally check financial inventory. But I would recommend having both of these ticked, but it really depends on your personal preference and your company's scenario. So that being said, let me minimize this. So that kind of brought us into, I kind of skipped around a little bit. I talked about physical financial inventory. That kind of brings us to our next topic, ledger to subledger. So basically, what is your ledger? What is your subledger? Your ledger is all of the transactions that physically hit your GL accounts. So for things to properly hit GL accounts, you need to have proper setup in AX. And then before I dive into what that proper setup looks like, let's talk about what the subledger is. So the subledger is the inherent AX inventory transactions that are taking place whenever you receive something, sell something, do an inventory adjustment, produce something, etc. This is what is actually in AX hitting your inventory. So no matter what, there's no way to stop things, block certain transactions from hitting your subledger. This is what truly is physically happening. And your ledger is what is hitting your GL accounts. So the way to properly basically balance your subledger with your ledger is to make certain that you have your ledger accounts and what is posting to your ledger accounts from inventory set up properly, and that you really understand what accounts it's supposed to be hitting. So really quick, that setup, as many of you may know, is found with item groups. So I'm just going to open up an item group really quick so we can see this item group audio product right here. We can see that our packing slip is going to hit main account 140200, which is finished goods inventory. So when this packing slip right here, this is what we were talking about physical inventory. So this is what account this will hit when this is packing slip updated on the sales order. So this is our physical inventory account that's going to be hit. That's 140200. So when we sell something, when we ship something out the door and packing slip updated, this inventory account is going to be, we're going to basically issue inventory out of this inventory account. And then we can also see that issue right here. This is when we invoice that sales order, hitting the same account. So we've set up both physical and financial inventory to hit the same account. Some companies set it up so that we have two different accounts set up here. So we have some shipped, not invoiced account here, and then an inventory account here. So we really need to pay attention if we have them hitting the same account or just or hitting two different accounts, and that will depend on how you reconcile your GL accounts with your inventory value report, which we'll get into shortly. So understanding what transactions are going to hit what accounts is very important to understanding your inventory value report. So let me minimize this again. And then finally, the last thing I want to touch on before we dive into our configuration and demo is on-hand inventory versus our inventory value report. So there's this inventory value report that we can run, and it takes a long time. And then there's also the AX on-hand inventory function, which I'm going to just quickly show. So up here in common, on-hand inventory and inventory management, which will show you how much inventory you have on hand at any given time. So what are the few differences between the inventory value report and this on-hand inventory grid that we see here? So the on-hand inventory tells us what we have on hand right now, whereas the inventory value report can tell us what we have on hand, what we had on hand at any point in time, can tell us, you know, if we're trying to balance, if we're trying to reconcile our GL versus our subledger, it can tell us, you know, we can look at it by specific days, et cetera, and really narrow down maybe where our issues came from between our subledger and our ledger. So this on-hand inventory is really more for the business every day to see, not for doing reporting, but for the business to see how much inventory do I have, how much do I have reserved, how much do I have on order, how much is ordered, et cetera. So it's really more for kind of the day-to-day functions and seeing how much inventory I have available, can I fulfill sales orders, et cetera, rather than the inventory value report, which really allows you to kind of analyze the value of your inventory. Okay, so one more slide before we get into configuration. Just want to briefly touch on the different uses of the inventory value report. Just want to tell you guys a quick story about how I really got interested in learning about the inventory value report. I was working with a client a few years ago, and they really had some major issues with their GL accounts not matching their subledger. And I really got familiar with the inventory value report in trying to solve this issue. It took me a couple weeks to kind of learn all the ins and outs, which I'm going to try to show you the most helpful hints that I came up with these in these few weeks. But obviously, it's a very complex report that, you know, will take some getting used to, and at least hopefully this will give you guys building blocks to be able to interpret. But anyways, so the uses of the inventory value report. I think one of the biggest ones is, like I've been talking about, balancing the subledger and the ledger. That date feature that allows you to look back in time and look at different time periods, et cetera, I think really allows you to look at how inventory values changed over a period, so you can narrow down how did this GL account change in this, you know, even one day, and how did this subledger change over the one day. So you can see, you can pinpoint a smaller amount of transactions versus trying to look at it over a whole year or a whole month or whatever. Also, there is a feature that goes along with the inventory value report called the potential conflicts report, which can tell you, it can kind of show you some things that the system notices that might be wrong, like you're not posting certain things, you're not posting physical transactions for the GL problem. You have a different GL set up here and here. So that report I'm not going to get into, but it is helpful in trying to pinpoint any issues that you might have between your ledger and subledger. Finally, you can display your GLs at the bottom of the inventory value report, which allows for really easy comparison. You can see, you know, these three inventory groups posted these three GL accounts, so I can see, okay, for this inventory group it's this much, the GL accounts this much, so you can see just right there on the report if the values match or not. Another good use of the inventory value report is using as a baseline for physical inventory accounts. You can kind of compare with your accounting journals and just see what you had when you started and kind of use as, a report to go back and reference once you're done with your physical inventory account to see, how far off you were. And finally, you can slice and dice your inventory quantities and dollar amounts in many ways for analysis, by dimension, by item group, like I said, just a lot of different ways. You can see physical values, financial values, you can see them together, you can see your average cost per unit of your inventory, et cetera. So a lot of neat features. So all that being said, time to dive in and configure a report. So, sorry, I just showed where we run the report. So before you can run an inventory value report, it's very important that you set up, configure your inventory value report properly. So this setup can be found under Inventory Management Setup, Inventory Value Report. And there's a lot going on in this setup to understand. So I'm going to try to hit on everything to help you, make decisions about how you want to set up your inventory value report. So first thing you need, if you're going to create I'm not going to create a new report, I'm just going to talk about this setup. You can see in this environment we have 4 different setups. Right here, 10, 20, 30, 40, and then they have different descriptions. This allows us to easily just run a report. I'm going to run 10 today, I'm going to run 20 today, if you know what each of the reports is telling you. So I'm just going to go through this 10 inventory, and just walk through each of these fields and what it means in our setup. So data interval. This is where you can pick a data interval, which is set up behind the scenes in AX and the data interval codes. To run your report. So if you run this report like monthly, weekly, whatever, you can set up a data interval code to just kind of consistently, easily run it for this term period. This just kind of makes things easy. Let's you quickly run the report. You always know what you're going to get. That being said, you can always override the data interval when you're running the report. So if you just want to run it for a couple days, or you want to run it for ending yesterday, or whatever, you can change that at the time of running the report. So this is just for easy, simply always producing the same report. Range, either posting date or transaction time. So what does this mean? Posting date means when the transaction is actually posted to the GL versus when the transaction took place. So I enter an invoice, but I don't post it for a couple of days. When I entered it, that's the transaction date. When I post it, that's the posting date. So I think most people usually want to go with posting date. Dimension set. This is where you can choose what dimensions that you think by. I'm just going to look at it by main account, but you can see it by main account in the business unit, etc. I'm just going to choose main account for now. Okay, so this is where we really get into the important stuff. The columns. And so basically this is how you set the columns of your report. So this is what's going to show across the top of the report, and it's really going to define what your report is telling you. Okay, so financial position. These 4 boxes, 1, 2, 3, 4, 5 boxes right here will set up what we see in our inventory value report as far as what values of inventory we see. So if we select inventory, we're going to see what we have on hand in our inventory. Not with inventory, so not something that's been picked for a production order, but anything that's been received, anything that has been completed for production, and that's pretty much it. Anything that's been whipped, anything that's been picked for production order is not going to show in this inventory. WIP is everything that is in WIP, so anything that has been picked for a production order. Actually, sorry, I think I misspoke. So anything that's been picked for a production order will be included in inventory. This will just show you further what is in WIP. So if you select it, you want to see what's in WIP, this will, if you guys produce goods, this will show you what's been picked for a production order. Deferred COGS and COGS. So this will show you what the cost of what is in your cost of goods sold, anything that has been shipped but not invoiced. So if I've shipped something and I have not yet invoiced it, anything that, when you look at this report on a certain date, anything that's in that bucket will show right here, and anything that actually is in the cost of goods sold, so has been invoiced, that's which will show right here. And then this is your profit and loss. So this will show the financial amount posted to P&L for inventory. So basically right now I'm just going to show inventory just to kind of keep things basic. Let's just say that we don't have a production scenario. We just have, we buy goods and sell goods. We're a distribution company or something, just to keep it simple for our first month that we're going to do. Next piece in the column setup is whether or not we want to print account values for comparison. So this is what I was talking about. If we want to display the GL accounts at the bottom of the report, this is where we can do it. So I just want to show you how I have set this up. Can't do details, but I've entered this account 149999, which is our total. I'm going to actually navigate to the GL really quick so I can show you what that account is set up as. So this account is our total physical inventory. This, you can see, is set up as a totaling account. So if we go, click on this account and see what accounts are included in this totaling account, we can see it's any account from value 140,000 to 149,998. So basically anything in the 1400s is included in this total account. So we go back to our main accounts, we can see anything that's in the 14. This is our raw materials inventory and our finished goods inventory. So this totaling account captures two accounts, raw materials inventory and finished goods inventory. So if we go back to my setup of the inventory value report, you can see that I've chosen this totaling account. So you'll see when we run the report, on the bottom of the account, it's going to show both that inventory, the finished goods inventory account, and the raw materials inventory account. Because this just picks, if you choose a totaling account, it displays all of the accounts that are included in that totaling account at the bottom. Let's say we wanted to only look at one item group, inventory. Let's say we have a raw materials item group and a finished goods item group. And as you saw before, we had two inventory accounts, raw materials inventory and finished goods inventory. We would assume that our item groups are set up to properly post to either the raw materials or the finished goods respectively. So if we were only wanting to look at raw materials, for example, we could say, and then when we go to run the report, you can filter by item group. We would say only display raw materials, so we could compare raw materials only to the raw materials account. Or if we can just put this totaling account, so we always see all inventory accounts at the bottom. We'll get more into how you can view things just by item group later in the conversation. Okay, so next also, if I had selected any of these boxes down here, you'll see it now becomes available to set up deferred COGS. So if I were to choose any of these, I can choose my account, my WIP account, deferred COGS, cost of goods sold, etc. Down here to also display on the bottom. But like I said, I'm only showing inventory for at least this one. And then if we have time, we'll show a more complex scenario. Okay, summarize. This box right here lets us decide if we want to summarize physical and financial values. So if we don't select this, basically it'll show a column for physical amount and financial amount, and physical quantity and financial quantity. If we do select this, it'll only show one value for both, so it'll combine physical and financial. Now, this could be a problem if we have two different things going on. If we have two different accounts that you're reconciling with for physical and financial, if you're combining the two, then that can be an issue because you need to remember to combine both accounts when you're reconciling. Or if you're not posting physical inventory to the GL, then you're seeing, both your physical and financial in your inventory value, but your GL is only showing financial. So I'm going to show you with these not summarized first, and then again, if we have time, we'll show what it looks like if it is summarized. Next is include not posted to ledger transactions. I decided to select this just so we can show what the column will look like when we run the report. Basically, this would show, for example, if we said not to post physical transactions to the ledger, then we would see that here. So if you see in your physical that the value in your physical financial or your physical inventory amount is the same as not posted to ledger, ding, 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 you're probably not posting your physical transactions to the ledger. So I'll tell you what that looks like when we run the report. Calculate average unit cost. This just adds a column to the end of the report that tells you what the average cost of each piece of inventory that you have is based on the total inventory value. That being said, don't get this confused with what the cost of your goods sold will be when you do sell it, because this just basically takes the total and divides it by the amount rather than your cost of goods sold. The actual cost of each piece of inventory could be different depending on what your, most likely will be different depending on what your costing methodology is. So this just really tells you at this moment in time with this 100 pieces that you have, this one piece right here is worth 5 cents based on the total amount of inventory you have in the total value. Print total quantity and value. So this is only available if you do not select, so watch if I select summarize, this will not be available anymore because it already grouped them together. But if you do not have summarize selected, then you can select this total quantity and value. Basically, with this unchecked, you have columns for both physical and financial, and then this provides you a total of both. So right now I'm going to not select that and select the summarize so we can see all the possible columns. Okay, final column setup. So inventory dimensions, this is if you want to have a column for site, warehouse, different, configuration, size, color, etc. So you can see how much inventory you have on a more granular level right now. I'm going to display site, and I'll choose total just to show what that does. And then I'm also going, and then resource ID and resource group. So if you select resource ID, this will show you, this will provide a row for every single, it'll provide a column for the item, and then it'll provide a row for every single item that you have on hand. And so this is if you really want to see, I want to see, how much I have of every single item. Resource group is your item group. So if I select you, it'll show me the item group that each of the items belong to. And it presents this information in grouping. So once I run it, I'll show you. But like if we have 3 different item groups, it'll show one item group, then the next, and the next kind of in chunks rather than you have one item of one item group, the next line is one item of another item group, and then it'll display the total at the bottom so you can see your total of an entire item group. So I'm going to display the total for my resource group. I'm not going to display the total for my resource ID. If I display the total for my resource ID, basically what this would do is if I had this resource all across like 5 different warehouses or 5 different locations, and I broke it down into location, it would show me the amount at each location, and then in the total row, we'll see how the total rows display. But in the total row, it'll show me the total for that item. So like if I have an item, 5 pieces in one location, 5 pieces in another, and 5 in another. It'll show a row for each of those, and then finally the total of 15 right underneath that. So I know that's a lot of talking, but we'll kind of see a little more what that'll look like when we run the report. Finally, the rows, the resource type. I'm only going to select, you must select material, as you can see. I'm only going to select material for this scenario just to be a little bit more basic, so we can really dive into the basics of the report. And then you could also decide to show labor, indirect costs, and direct outsourcing on the report if you so choose. Finally, you can show the report rows in a detail level of totals or transactions. If you have a lot of items with a lot of transactions, running transactions will kind of overwhelm the system. I think you even get an error message. To avoid printing a large amount of transactions, we recommend you do not select the transaction detail level for large ranges of items. So maybe if you're trying to dig into what's happening with just one item, you can choose transactions, but if you're just going over all your items, I would select totals. You can also see that include beginning balance only becomes available if I select transactions. If I go back to totals, this does not become available. So just so you know. So on our report, it's only going to show ending balance. We'll see that when we run the report. So that is kind of all of the configuration possible for the inventory value report. There actually is a few more things that you can do when you're actually running the report to do a little more filtering if you would like, which I'll show. But this is pretty much what's going to control what we see on our report. So now let's go actually run the report to see what we just set up. So now I'm going to report inventory value, which is under report. It's kind of buried down in there. So I know that when I was first starting to use the report, I was like, what the heck is this report? But it is under report, status, inventory value. And you can see that potential conflict report that I mentioned is right above it, just so you know, for future reference. But so I click on the inventory value report. Now that brings us to this screen right here, where I can choose the ID of my report. So as you know, we set up different configurations for reports. The one we just set up was 10, and that's the one I'm going to run. Again, like I said, it will default to the interval code that you selected, but I could override this right here if I wanted to. I'm just going to keep it for the current period. And now, finally, if I wanted to further kind of filter my report on what I was seeing by, do I just want to see one item? Do I just want to see one item group? I can do that right here. I want to see everything right now, so I'm just going to go ahead and select OK. And I don't know if some of you have had this issue before, but inventory value reports can take quite a long time to run. I don't have too much data in this system, so it won't take too long. It's actually finishing up right now. But I've had issues with clients where it can take up to 5 hours to run. So I would recommend running it in batch mode or running it, overnight, setting up jobs to run it overnight, etc. Because if you're, kind of waiting on results from it and you run it during the day during production hours and not in batch mode, it will definitely freeze up your computer if you have a lot of items with a lot of transactions. So just one piece of advice. Okay, so let's look at what this report is telling us now that we have run the report that we just configured. So let me try to maximize this. Okay, so we now see on a report the different columns that we told the system to use in this report. So let's talk about, again, briefly each of the different columns. So right here we see resource group, we see our resource group, our item group listed down the column. Next we have resource, so we see each of our items listed down the column. You can see, sorry, really quick, right here you can see all these rows for totals. That was like I said, we set up totals, I believe, for sites. So yeah, we selected totals for sites. So I'll show you if we have somewhere with a couple sites. Basically, so what that means is if we had like 3 different sites or 3 different locations in a site, and we broke it down to show us the 3 different location values, it would show us then the total for the site. But let's not get into that too much. That might be a little confusing for now. So maybe just ignore the totals rows for right now. And then now it displays the site as well, so we can see how much we have of D002 in site 1, of D003 in site 1. If we look at one, I'm looking for one that might have 1 and 2 sites that I don't see any right now. I think there are some at the bottom, which I'll show you. Reference ending balance, so this tells us this is the ending balance for this period, so 6:30, but it's actually 6:09, so probably today. Inventory financial quantity. What does this mean? Inventory financial quantity. This is the quantity of inventory, how many pieces you have on hand that was financially updated, how many pieces you have on hand that was invoiced, so how many pieces you received that has been invoiced, and not invoiced on the outbound, not sales order invoice. Financial amount is the amount, so basically the quantity times the amount of each piece of inventory. So that's the amount, that's the value of this financial inventory. Again, like we said, invoice inventory. Physical quantity posted, negative 287, so we clearly allow negative for physical, and physical amount posted, negative 42,597.11. So physical amount, quantity, and amount posted are, again, what I was mentioning before, the inventory that has been physically received but not invoiced, or physically shipped but not invoiced. So that's how much you have that has been physically received and not invoiced. Then you see you have nothing in the not posted, so that's good. We have no inventory transactions that are not posting to the GL. And then finally, I believe we asked for our inventory amount to be totaled. So this is the total of the physical plus the financial. So 123,338.68 minus 42,597.11. So that's our total inventory amount, physical minus financial, or plus, but this is a minus. And then you can see it's 544 is our quantity. And then our average unit cost is 148 and 42. So that is basically this inventory amount divided by this, just basic. So I'm going to really quick, now that we see this report run, I'm going to really quick go to my slide that says the frequently asked questions. Why do I have negative inventory values? So again, right here, we see negative values right here. So let's talk about why I would have a negative inventory amount. Again, like I said, let's say we have received 10 pieces and we have not yet invoiced any of those 10 pieces. Then we go ahead and ship out 5 of those pieces. We're going to start with 0 for our amount, and then that's going to bring us to negative. So sorry if that is a little bit unclear, but so basically we will have negatives on our report. Basically, so physical amount actually will be if we actually are shipping stuff out that we know, or producing stuff that we know is about to be made. But for the for the negatives right here, what we see is that this will be if we are shipping stuff out that we have not yet invoiced, not yet received a vendor invoice for. So that's why we see negative amounts. I get that question a lot. Why do we have negative amounts? And again, that is very common if you allow, negative financial inventory or negative physical inventory. So it's really important to understand what negative financial and negative physical inventory mean, and we can certainly, we're running out of time here, but we can certainly have follow-up conversations on what physical versus financial means and how we would possibly arrive at negative amounts here. Finally, just want to scroll down to the bottom of the report, which will kind of show us some of the other useful tools that we set up. I'm able to get to the bottom of the report. There we go. Okay, so the bottom of the report actually shows us a few cool things. So we can see right here at the bottom that the TV and video resource group is our final resource group to display. So you can see that you have all your individual resources listed out, and they're all part of TV and video. And then we have the TV and video resource group totals at the bottom. So you can see we have the total financial quantity, financial amount, physical quantity, physical amount, totals, all for this resource group. And then finally, all of your material totals right here. So let's look really quick at our ledger accounts that we have set up on the bottom of the report. So our raw materials inventory account right here, this is our amount, and then our finished goods inventory amount right here, and then our total. So these are both of these put together. But if you recall, I just set up that 149999 account, and we can see because we chose that one totaling account, we have both of these accounts displaying. You don't see that 14999 account, that's just here in the totals. So let's see, if we look at our, and if you recall, we did have both physical and financial transactions posting to the same inventory account. I believe it was this 140 for finished goods. We had them both posting to the same. So if we look, we can clearly see that in our sum inventory amount, it does not match our inventory amount down here. So let's take a look at, again, I'm not quite sure how this system is set up to host inventory transactions, but let's look at that audio group that we had, the total for the audio group that we had posting to the account 1402. So I'm assuming that the finished goods account would be posting to this audio, not raw materials. So basically, this kind of shows us exactly why we need to know what accounts are posting, what item groups are posting to what account. So basically, if this item group is posting to a certain account and another item group is posting to another account, those are the only item groups that we should be reconciling with the two accounts. So we should only be reconciling, sorry, the system's a little bit slow, but if I'm reconciling with these two accounts that are displaying at the bottom, I need to know which accounts are posting to the two GL accounts that I'm displaying, which item groups are posting to the two GL accounts that I'm displaying at the bottom. So in reality, these should match at the bottom. Our, our totals at the bottom should match these accounts that we have right here. If these are all truly inventoriable items, this just tells me that I have set up wrong. I have something set up wrong, that certain things are not posting to these two accounts. These two accounts are not the only accounts that I have set up for item groups hitting, hitting the inventory GL. So I need to go and take a look at my item group setup and make sure that all of my items, items groups are posting to one of these two accounts for all inventory transactions. So that's what that's telling me right there. Sorry, that's quite hard to see. So that's what that's telling me right there. This does not match my total right here, so I had something set up incorrectly. And to find that out, it takes some investigation. You can also, you know, look at this report, like I said, for one day, and then look at your two accounts and see, okay, what am I off for this day? And then you can go into research on your item group, see where your different item groups are posting, see if you have different accounts that are getting hit with these transactions, etc. So reconciling your GL, if you don't have things set up properly, reconciling your GL with your inventory value report can be quite challenging, but hopefully this report can, you know, identify if you are not balanced, and then that can, you know, help you take a step towards figuring out what setup you may have wrong, that things are not correctly posting to the correct account. So, all of that being said, I think that we covered all of these FAQs. Sorry, I'm going to present again. Why is my actual item cost different than average unit cost? We covered that. Your actual item cost is actually your cost of goods sold, your costing methodology that you set up, and your average unit cost displayed in the report is just quantity divided by amount. Amount divided by quantity. And then finally, why does my inventory value report take so long to run? Again, we should be running it in batch mode if we have lots of items with lots of transactions. Otherwise, you can probably just run it if you don't have a lot of items and not a lot of transactions. You can run it just like I showed, or we can set up a job to run it nightly, etc. So it's definitely normal for an inventory value report to take a long time to run. So don't think that something that you have set up wrong is taking longer than you would anticipate. So that being said, we will open it up for questions. I know that we have about 5 minutes left, so hopefully we can get through those in the next few minutes here.
Great. Thank you so much. We've got 2 questions in the queue right now. One is from Wendy, and it was entered quite early during the presentation, so I'm wondering if you'll understand the context. Is there a matrix that defines these transactions, meaning the item group posting profile?
So I'm not quite sure what you mean by a matrix, but I'll show you. If we dive back into item groups, I'll show you there. I think I sort of get what you're getting at. So we can see we have our different item groups set up right here. And once you click on them, you can see all the accounts that they're posting to. If you want to see an overall picture of what's posting to what account, this is the overall picture. But however, there's not like one big grid where you can see every single account and every single thing that it's posting to. But at least here we can, you know, kind of click on each of the different transactions tracking clips, and you can see what is set up for any different item group to post the tracking clips. So as you can see, this is one thing why we probably had some inconsistencies in our report, because the only item group that I have posting to anything for packing slips is this audio item group. So none of those other item groups had anything set up. And then if I, you know, kind of go through, you can see, so here's one that has multiple things set up, so you can see all items, different account relations, post to different accounts. So this is kind of where you can see by different transaction types what different setups you would have by different item groups if there is any. So here we can see for this item group we had one main account. For all the others we had this main account. but we could have had something else set up here, even though these two are the same. So this is kind of where you can get your overall picture. Not quite sure if that is answering your question, but this is the best way to get the most overall picture of where everything is looking.
Great, thank you. And Wendy can follow up with you via email if she has additional questions. So
Yep.
we had another question from Rebecca. This was entered relatively earlier in the presentation as well, and she asks, what is the migration for this report in AX 2009?
Good. I'm not quite sure I understand that question.
Yeah, I'm not sure either.
I'm not sure what is meant by migration, so I think that's.
Yeah, and so what I will do is I'll ask Rebecca to follow up with you via email. If
Okay.
Right before we close here, we're at time. Do you want to display your email addresses again? Was that at the beginning? Or?
Yeah. It's actually our last slide, so.
There you go. There you go. So, folks, look at their email addresses. If you've got a question that we couldn't answer today during the presentation, please feel free to follow up with either of the presenters via these email addresses. And because we're at time, I want to thank you so much for your presentation today, and I want to wish everyone a wonderful weekend. With that, I will stop the recording and close the presentation. Thank you so much.